Hi everyone, welcome back to Talent Order's Breakfast Briefing, Friday, 15th of May 2020. This week I'm joined by Katia Lang, founder of the FinTech Times, and the theme this week will be the effect COVID-19 has had on the UK FinTech market. Katia, thank you so much for joining me this week. I really do appreciate you taking the time to discuss the impact that COVID-19 has had on FinTechs. Before I go into any questions, can you give the audience a little bit of background on your career history?
Yeah, so I'm Katia Lang, the ex-CEO and the founder of the FinTech Times, which is one of the most kind of serious media companies in the sector. I was used to saying we, so they now cover basically all the news and all the trends and interview all the biggest players daily. And I've sold the company in January, which is why I'm not that much involved in this, but I still find it very interesting to read it.
Yeah. Well, that's always good. Well, thank you for that. That's really helpful, and it kind of tells the audience why I'm asking you these questions. So my first one is, how do you think the UK fintech market has responded to COVID-19?
Well, it's COVID-19 has been obviously a massive hit for the UK economy, and as the first reaction to any economic crisis or recession, obviously the freeze and uncertainty every possible way. So nobody wants to invest anything, nobody wants to hire anything, nobody wants to pay anything. Everybody is sitting on their cash generally and trying to not spend anything. This is like the first reaction was that. I think as time went by and a few weeks on, and people actually started to kind of having all these, internal briefings and meetings, as I would imagine, and they started to come up with various strategies of being. And I'm pretty sure what I'm saying is not just true for fintech; it's probably true for absolutely anything. Fintech companies and the whole kind of startup sector has a few advantages because we're used to working from home for a start.
Yeah.
We're very used to that. And there's so many startups that just do it all the time. Everything is completely digitally connected. Everybody works on Slack. Everybody works on all these various, team kind of connecting kind of platforms. So in a sense, not having an office space haven't affected us fintech or startups as much as it would have affected bankers, who, as much as I have some friends in banking, they actually always thought that work from home means don't work. So this had to change. Now they're like, work from home means do something, which is what? That's not what they're used to. I would imagine the cultural shift in startup world and fintech world was actually slightly easier than in finance. However, most you can relate to that.
Absolutely. I think especially with fintech, they're more advanced with tech. They're used to working from home, whereas your banks are a little bit more old-fashioned, and you need to go in finance. You need to go in, so they weren't as prepared.
But now they actually found out they didn't. It's one of those very famous little pictures in the Times. No, sorry, not Times, the New Yorker. It was like, well, actually, all these meetings could have been emails. It's just like they haven't realized all these lengthy, huge meetings were actually quite useless, to begin with. So going back to fintech in the UK, I think the most hard hit companies are the early stage ones because they're very vulnerable, and depending on their burn rate, all they do, fintechs, as you probably know, is raise money. That's basically all they do. So they try to build something at the same time they're raising money, and they just do these things simultaneously. And if one of these things don't work, then the company just collapses.
Yeah.
So they always have these plans, or we raise this in June, or we raise that in December. So these obviously changed, and now the burn rates they're trying to stop However, and the investment might not come. So there is a lot of uncertainty with investments, which kind of makes them properly scared and properly careful with money, and yet sort of convince investors to not pull out, all this. So I think the biggest ones to experience that probably would be digital banks and all these challenges, because they're spending hundreds of thousands of pounds a month on their beautiful marketing and all sorts of things. And without the next round of funding, they're dead. That's that. Because they're not making.
Absolutely. Okay, so that actually does bring me straight on to the next one. So you have kind of mentioned some of this, but what fintech categories do you think have seen the most challenges and disruption from COVID-19? I know you've mentioned the kind of startups. Are there any particular categories that you think have had most challenges?
So yes, I would say challenger banks, any sort of beautiful bells and whistles, B2C kind of fintechs, which are not that useful in a sense, because they're like everyone with overhyped valuation, high cash burn, and kind of whose activity has been paralyzed by the crisis. Wealth management, these guys are experiencing big trouble, as well as people who actually benefit from foreign exchange. So any businesses digital, doing some kind of digital payments and FX, because people don't travel, people don't abroad, and it's like, and all the kind of, it's still changed a lot. So
thank you.
the biggest threat is obviously pulling back some VC investment, and the combination of having business troubles and lack of VC involvement, I would think.
Absolutely. Okay, so how do you think the fintech employment market has been affected during the pandemic? Are there any areas where you believe there could be a spike in recruitment, or where you believe there has been a spike in recruitment?
Well, I'm not a recruitment specialist, so from what I've heard from just people I know in the industry, I think there is a transition from in-house to outsourcing, whatever they can, and people just work from home, and to things like writing, PR, things like that. Nobody really needs that happen so much. I feel like obviously all external consultants and people who don't feel like they were relevant enough for the core business will not be involved in the business anymore. And but I think that there probably is no change in hiring developers and people who are meant to build stuff, because again, they don't want to remember this thing I showed. So VC investment building needs to happen. Without there's no building, but then without of actual products, there is no next round of investment. So they wouldn't free this hiring, I think. Anything with marketing just moved online. I don't think there were any changes in hiring in that area at all, because I keep getting a lot of people about help with marketing. So in general, I think as soon as the uncertainty kind of settles, possibly there will be not much change, unless the company actually has funding and is going bust, which is a different thing. But I'm sure there will be a lot of jobs that probably will free up. There will be a lot of people who will stop working. You know what definitely is a trend, again, with my kind of slight exposure to the banking sector at the moment. A lot of banks will actually fire a lot of people. That is a fact. They just will.
Yeah.
And these people will probably work for fintechs, or anybody who's winning this race.
Yeah.
Good for you.
Absolutely. Yeah, absolutely. Okay, great. Well, that's really helpful. And actually, you've mentioned investments quite a lot, but what do you think the attitude towards investing into the UK FinTech market is currently? And do you think this will change post-COVID-19? If so, how?
I think it's the race for the fittest, right? So it's the race between everyone it's like survival mode at the moment, survival race, country, if you want it. It's so the companies with like super hyped valuation, super beautiful pitch decks might get a lot less attention, and early stage companies might not get attention from the investors because nobody wants any more uncertainty in their lives, in their investment life. However, the companies who can show that they have not been affected by the COVID crisis, or some sectors who actually have benefited from it, they would get enough attention, I would believe, because they still need to invest, they still need to make money. And I think this shouldn't change so much for them. So it's all about the metrics now, about promises of this beautiful future, which used to be the one that which used to be the thing that fueled VC investment in the past, as we know, from the horrendous examples of Uber or WeWork.
Yeah, it's a really, really difficult time because so much is uncertain. You've got to have real belief if you're going to be doing a new investment now. I think it's just a scary time for everyone.
Now, so that's with some metrics and some proper kind of
definitely. Okay, so thank you. And then finally, what areas of the UK FinTech market do you think will expand post-COVID-19?
So I would currently, what shows quite a lot of expansion and success are consumer and SME lending platforms, probably because everybody ran out of money and they suddenly started to borrow cash. Another quite obviously great industry is insurtech. So which is part of, so anything kind of like mortgage and life insurance, digitalization companies, platforms, they're kind of changing their role from just being the startups trying to disrupt their large companies to actually being the main point of lending for SMEs and customers. So another big trend is that there will be big competition for the digital consumer. So whilst the big banks used to have the consumer as such, and the digital banks were fighting for that. Now all the consumers are digital only, and there will be a bit more equal competition in a sense. So some of the online banks will actually grow just past the initial kind of dip which we had. Then all kinds of AI platforms, everything that has to do with chatbots, anything that has tech for call centers, because obviously everyone needs that now. Everyone suddenly realized we can't really meet face-to-face. We don't have an office, so we need to invest into all sorts of tech to enable the business to exist. So these guys are doing pretty well. And all the KYC and ID identification companies, they're doing pretty well because again, everybody needs that. So it's not all bad. However, we have to, I think, expect this crisis to the kind of the mode, this kind of panic crisis mode, will probably still be around until the Q3 of 2020, at least.
At least, absolutely. I said it's going to be a slow process, certainly. Really difficult, but I think, a lot of fintechs could potentially come out quite well because, as you said, so many other companies are actually thinking, okay, we need this tech to be able to work from home. We need to be able to do this. We need to be able to do this. So they have got that demand. So
there's the more the big companies and the tech companies, because they just realized finally they actually really need each other.
Yeah, absolutely. All right. Well, thank you for that. I really, really appreciate it. They are all of my questions for today. Thank you again for taking part. I'm sure our viewers will find it really insightful and helpful. If anybody has any further questions for Katia or any ideas for what themes you'd like to hear about next, please email me on amy.morris@talentorder.com or message me via LinkedIn. If you missed last week's breakfast briefing with Graham Reed, I will leave the link down below. I hope you're all staying safe and well, and I'll see you next week. Bye.
Thank you.